Mexico, so I'm out here, we in the building, traveling digital nomad trader. And, I just want to give y'all a shout out. Today is March the 12th, 2024. And I just want to show y'all what I'm doing for today, how my trades is looking on my small account, which I love to show everybody. I don't know if I turn this sideways, it might look confusing. First time I did it like this is today we're up. You can see today you're up 200 or so dollars. And we can take a look at my pending orders. Let's just look at my positions I'm holding. Positions held, there it is right there. And so if you look at that, you can see that GNW, I sold a $7 put. It's up right now for March 15th. That's expiring on Friday. It's up right now $5. Here's the Apple that's expiring Friday. That's a put credit spread. I got two of them. I got upfront for that. I got $24 upfront for that. So I'm waiting on that to get down. I got an NVIDIA. This one's up $74. I actually got $84 for that up front. So I'll actually close that out pretty soon because, I'm not greedy. I don't need to get it all out. I just need to get most of it. And I'm up 85%, as you can see. So once it get to about 90%, I'm gone. 85% is actually good for me, but I see NVIDIA still moving forward, so it's still going up. And remember, I'm doing put credit spread, so that means I'm wagering that it will not go down to a certain number. NVIDIA right now, if we look at NVIDIA, see NVIDIA right now is at $900. So if you can see that right there, NVIDIA is at $900. So and what does my put credit spread say? That I get to keep $85 if it does not go down to 805. And right now we're 100 above that, and it's closing on Friday. So if you're not sure about what I mean by that, is if you go down here and it tells you average credit was 85 cents per share. I got 100 shares that made it. The only thing I'm mad about this trade is that I should have took more positions, but I don't over leverage on one position ever. So I took the one trade. It probably must have cost maybe $1,000 or something, or $500. So I try to keep it at least 10 trades at one time. So because if you do all of them on one trade and it goes bad, you're in trouble. And a real experienced trader would never do that. What else we got? So that's just one position, and I got $85 for that, and right now it's worth me $73. So like I said, the market value is right now 12, negative 12. So hey, the farther it goes down, the more money I make. So that's it. So and the more that the price goes up, the more money I make because I'm selling puts, which means I'm selling the rights to somebody else that it should this go down to $800, 805, I have to buy that. In this particular case, I have a spread. So because it's not just one-sided, it has two sides. What I did is I protected myself so that I don't lose $805 times 100, which would be probably $80,000. So since I don't have $80,000 to blow, I put 800 right here to protect it on the back end. So I bought puts. I sold them at 805. I bought them at 800. So that means the maximum I probably could lose is about 500 something dollars. You got me? All right. That's how you protect yourself, and that's how you do a spread, and that's how you can get in position. So and if you really want to see, let's just see simulate the returns. Now that Robinhood has simulated returns, it's a really good tool to use. And so you can simulate your returns and see by moving this right here, what if it went down to 805? What if it went all the way down to 805? Which that's a long ride, but let's see if it went all the way down to 805. Let's see what it would be if it went down to 805. It's hard to get this thing to even move that. trying to get it down there for y'all so y'all can see. Okay, so here's 749. That's below 805. It's not you, it's me. So basically, the maximum, if you could see that, I probably would be losing. If it didn't, it would be close to about $500, 400 something dollars. Let's just see if it closed out. It probably should be about 500 at the expiration date. This is expiration right here. So if it at expiration, under the maximum I'm gonna lose is about $400. 415. You know why it's 415? Because I got $85 up front already. 85 plus 415 is $500. So I won't lose completely 500 because I already got paid 400 up front. So, and that's when people refer to cost basis. When they say cost basis, that's essentially what they're talking about. They're saying that it's the difference between what you already made from it to what you could lose. Okay, so in that particular case, my cost basis, I already got $85 up front, and in that particular case, should I lose everything, it would be 415 complete loss. So it's a good trade. Like I said, the only thing I kind of wish I did, since it was only $500, I wish I had did at least two of those, because that would have put me at about $160, $170 for the week on that one trade. But hey, you can't win them all. I know why I took only one position, because it kind of looked like it was too good to be true. But what happened was I saw what happened. I saw Nvidia make a dip, and I realized that implied volatility would go up. And anytime as an options trader that implied volatility goes up, the value of that option is going to go up too. So when I saw Nvidia make a huge dip, I said, "Oh, the options are going to be worth a lot." So I ran right in and I looked and I took a position that was expiring the very next week, and it was worth $85 for only putting $500 on the table. And that's what you got to pay attention to. And that's what experience does for you. The only thing that I showed lack of experience in is not taking more positions in that, especially when it only cost me $500 per position. That was a bad call on my part. But I didn't want to over leverage, or I had already spent a lot of money for the day. So at any rate, okay, guys. Well, that's what's going on with that. Let's get back to uh, the other things that we have. Let's see what else we got. These are just my orders to close. So I'll put a limit order on that to close for $9, which means that 85 minus 9 is whatever it is, 76 minus fees. So probably make about $75 off that position. And so right now it's probably $2 away. So it'll close in about, if it goes up $2 more, it should be closing. Yeah, that's my other NVIDIA, and it's closing this week too. And look, now it's zeroing out. Now it's going into the plus. That means NVIDIA is going up higher and higher and higher, the price. So, and just remember, guys, AMD is a family member of the guy who owns NVIDIA. So they really kind of run neck and neck. So when I trade them, I kind of trade them together. It's kind of like knowing that SPY and QQQ will follow SPY most of the time. And so a lot of times, if you put on a trade of QQQ, you might as well put on a trade of SPY. You might as well put on one QQQ, because usually QQQ follows it. That's a little game for you. And sometimes the thing about QQQ is it's sometimes cheaper to get into position than it is for SPY. So a lot of people will trade QQQ, or if you're a tech person, you might like QQQ more than you like SPY, the overall stock market. Okay. Speaking of SPY, there it is down here. There it is down here. It's up $2, but that's not until April. That's April. So that's Mara's next week. Really not tripping on Mara. I don't know how it could be. I sold an $18 put, meaning that if it falls to $18, I have to buy it, which will cost me $1,800. which that means I had to put up $1,800 just to get into that position. This is not a spread. There's not two sides to it. It's only one side. So I put up $18. How much did I get paid? Go down here. We can look average credit. To put up $1,800 for 2 weeks, I got $35 for it. Doesn't seem like a lot, but hey, it's what it is. And I didn't mind getting put Mara. So if it goes down to right now, it's at $19.85. Should it go down to $18? I already put my $1,800 up. They can take it right out of that. They can take it and buy it for me. I'll own 100 shares of Mara. Not only that, but if you think about it, even if I own 100 shares of Mara, let's go take a look at Mara. For owning 100 shares of Mara, let's see what the value of Mara is. Excuse me, what the see what Mara is showing my position. See how I put $1,800 cash collateral up? They don't play. It's expiring next week. They don't play. And so initial requirement 72%, maintenance required 6. That's kind of like money that you have to have. Mara got only 60 employees. That's all they got? Wow, I didn't know that. Okay. So earnings price and earnings ratio 15. 52-week high is 34. I wouldn't mind. I wouldn't mind, but I'm not gonna hold Mara because I really don't like holding anything that's not good dividend. But I do like Mara as overall. So, but I don't. It's one of the few ones that I trade that don't have good dividends, because I don't mind owning Mara. Let's look at Mara over 5 years. It goes up and down, but so you can see that over 5 years still it's up $17. Over the past 5 years, it's up $17. So to me, Mara is not a bad one to own, but I don't try to keep it because it doesn't pay dividends like that. So I don't really hold it, but I love to trade it. And it's one of the very few. Typically, I always say trade only things that you want to end up with, like an AT&T or something like that. So, so that's that. What else we got? G&W. Now this is a really good one because according to my trade schedule, G&W, I got $75 off of it. So like I said, always write down your trades, put them down. Right now G&W is at $70. That means today I'm up $5. And you can see it right there. 5 cents times 100 is $5. Go down here. If you're really still confused about it, you can go and say, okay, what was my average credit? My average credit for one position, one contract, is 75 cents per share, which is $75 because it's 100 shares. So I got that right there, okay? Current price right now is $6.30. And what did I do? I sold it a $7 put. Now, a lot of people are going to say, wait. Something doesn't make sense. If you're selling a put, that means if it goes down to $7, well, this is one of those ones that, as an experienced trader, you learn about. So check it out. I got $75 to sell a $7 put. Now, this is tricky because it's already below $7, which lets you know they're going to put this to me. The question is, how low is G&W going to go before it expires, before they put it to me? Technically, they could exercise me right now if they wanted to. Why? Because it's already below $7, and that means I would have to buy it for $7, and it's only worth $6.30, as you can see, right? So you're saying, hey, Mr. Cosmic, why would you do that? The reason why I did it is because I got $75 to do it. So if you get $75 to do it, and right now, and I buy it for 7, so you just say 7 times 100 is what? 700 minus 75, which puts my total cost basis at $625. This is not going to even make me lose money. until it dropped below $625. Technically, I'm up $5 right now, which is what it's really expressing to me already. Like, dude, you up $5 still. You see, so as long as it stays above $6.25, my cost basis will be up. The moment it drops below $606.25, my cost basis is gonna go down, which means I'm gonna start losing money. So even though I sold a $7 put, I'm not in a losing position because I sold it for $75. So $7 minus $75 is $6.25. Right now it's $6.30, which is $5 more, which means that the total return is plus 5. It takes time to understand this kind of stuff, guys, because it takes years. I've been trading for 7 years plus, so I'm starting to lose track now. But that's how you figure out your cost basis. And that's why I took a $75 because I really believe G&W is going to do what? Go up. That's why I wasn't really scared to take a $7 call, sell a $7 position put, because I felt like even if I got put it, that it probably wouldn't be too low, and I figured I could probably beat it. I probably could beat it to the expiration date. Now, this is getting real shifty because it's only $4 or $5 away from break even price, which should show on here a break even, but maybe not. Total return. So it's not showing a break even right here, probably on the other page. But anyway, after when you look at a Genworth Financial, and if you look at the last month, which I like to look at the 3 months, because if I'm trading within a month time frame, I look at 3 months. If I'm trading within a 3 month time frame or more than a month, I look at the 1 year. So you can see that what has it done in the last 3 months is actually only up 1 penny from the last 3 months. So, but it's not in the negative. So that shows that this is really in the last 3 months. It's probably around its average price, 630. It's right there around where its average is at since 3 months ago, which would have been, there you go, 639, 636, 628. There it is. So it's really close to what it was 3 months ago exactly. So therefore, it made sense when I said, okay, I'm gonna take a chance. Let's look at what it did in the last month, and that will give you even a more idea of why I probably took that position. 1 month, and 1 month, it's up 14 cents. Okay, so I was figuring, it's probably gonna go up over the next month, the next couple weeks. So, either way it goes, I feel like I'm not in a bad position um, on Genworth. Again, another one that dividend yield not there, but still, I like to trade it because it seems like it brings money. And even if I get caught with it, it doesn't fall real hard, and it's been going steady sideways or trading upward slightly. So I feel comfortable with taking a short-term trade, not a long-term trade. If it's going to be a long-term trade, I would definitely, guys, go with something that paid a dividend. But for these short-term trades, for these low amounts of money, I don't mind because I've already looked at how they trade, and generally speaking, they're not stocks that are falling. As you can see, Genworth over the 1 year time frame has been going up. So there it is. It went up 71 cents over the past year. So when I look at a stock like that's that low price, that doesn't have dividends, but I still want to trade it because it has money in there, then it has to been showing me that it's been going up. Because if I get caught with it, I don't want to get caught with a falling knife. So I always like to go with stocks. Like if I mess around with a trade, even when I'm trading stuff that does pay dividends, if on a 5 year or 1 year is looking like it's falling, I try to stay away from it for the most part. That makes if that helped you guys at all, and that makes you guys have a better understanding of selling puts and calls on the stock market, selling puts and calls for profit, or doing the wheel strategy. I hope that helps you guys. I'm Mr. Cosmic. This is the Cosmic Training Academy. If you guys are interested in this kind of content, subscribe, hit the bell, and check in the description if you're interested in getting any private mentorship, because I actually have videos that will actually explain it. Not only with the videos, I'll hop on a couple phone calls with you and walk you through and help explain it so that you can make a weekly or monthly profit too, just like I do. I live abroad, I travel, I slow travel, I go from country to country. I live at a higher quality of life than I was able to live in the States, and for a lower price. And I don't have to make a lot of money because I don't need a lot of money to live the lifestyle that's better than I was living before, which was basically indentured servancy. But I'm not going to get on the soapbox on that. That's not what I'm here for. What I'm here to talk about is trading. And if you want to talk about other stuff and you want to see my travel pictures and videos, it's on my Mr. Cosmic YouTube channel. So, guys, I appreciate you guys tuning in. I don't post that much because the area that I'm in you'll hear explosions and machines and cars and trucks and da 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 da. So I'm gonna move soon to a more quieter zone so that I can have a more peaceful environment. So not knocking this, but for what I'm doing, it's hard to do to do a lot of videos because it's a lot of distractions and stuff. Even doing side gigs that require me to talk on the phone, it's sometimes it's very, so you have to make sure that if you're doing this kind of business or anything like that, or you making videos, you have to be in a place that's quiet. If you want to be a digital nomad, you have to think about countries or properties or environments that are relatively quiet. But anyway, I'm signing out, Mr. Cosmic. I'll check y'all on the other side. See ya.